Should you buy or sell ATM put options? Are you curious about whether you should buy or sell at the money put options? Let's break this down in a straightforward way. First, what exactly are at the money put options? An at the money put option gives you the right, but not the obligation, to sell an underlying asset at a predetermined price, known as the strike price, which is very close to the current market price. This means if you hold an at the money put option, you can sell the asset at the strike price, which is currently equal to the market price. Now let's look at some key characteristics of these options. At the money put options do not have intrinsic value since the strike price matches the market price. However, they do possess time value, which is the premium you pay for the option. This time value can be significant, especially if the market is volatile. When it comes to trading, at the money options are popular. They are on the verge of becoming profitable, making them attractive to traders. If the price of the underlying asset drops below the strike price, the option becomes in the money, and you can exercise it to sell at the higher strike price. However, if the price does not fall, the option may expire worthless, leading to a loss of the premium you paid. So, should you buy at the money put options? Buying these options is often a strategy for investors who believe the price of the underlying asset will decrease. For example, if you own shares of a stock and fear a downturn, buying at the money put options can act as insurance against potential losses. This way, if the stock price drops, you can sell at the higher strike price. On the flip side, selling at the money put options involves receiving a premium from the buyer. This strategy is typically used by investors who believe the price of the underlying asset will not fall significantly. By selling these options, you can generate income from the premium received. However, there is a risk involved. If the price of the underlying asset falls below the strike price, you may be obligated to buy the asset at that higher price, which could lead to a loss. When deciding whether to buy or sell at the money put options, consider market volatility. Higher volatility can increase the premium, making it more expensive to buy but potentially more profitable to sell. Additionally, keep in mind that the value of at the money options decreases as they approach expiration. This time decay can benefit sellers, as the option's value will decrease if the underlying asset's price remains stable. Ultimately, whether you should buy or sell at the money put options depends on your outlook on the market and your investment goals. If you expect a price drop or want protection against losses, buying may be the right choice. If you believe the asset's price will hold steady or rise, selling could be a good strategy for generating income. Always weigh the risks and rewards before making your decision.